day, good day. Another hump day real estate with Kendell. We have a guest supposed to be joining us, but until the guest comes, let's talk about what's going on in the market. Let's share my screen real quick. I hope everybody's doing okay out there. Just plugging away here, plugging away. Let's see. Right now in the market, if we talk about where things were during the 2007, 2008 recession versus where things are going right now. If you look at this, these are the foreclosure rates during that time. This is 2019 to 2021. We don't have nearly the same numbers. So, when we're thinking about the previous recession, we don't see the exact same thing going on in the market. So a lot of times when we think about what's going on, we're thinking about the past. We have to remember the differences of things that are actually going on, and have an understanding that things repeat itself, but not in the same manner. So we're not, looking at this chart with foreclosures most definitely were up in these years, and right now we don't see that same activity. Hey, we just had somebody join in. Who is this young fellow here? This hopped on.
This is Larry Davis, mortgage loan officer.
Mr. Davis, how you doing, sir?
Doing good, doing good. So
we're just sharing with folks a little bit about what the market and the fact that, one of the signs of the market right now is that when people are thinking about housing crash and in the market, is that the foreclosure rate was much higher around the 2008 recession. And we're not seeing those numbers right now to try to compare what people are thinking and all of that stuff. But we're starting off with a little something before you jumped on. Tell us a little bit about this. We want to be about you today, though. So tell us a little bit about you and all.
Okay, sure. Again, my name is Larry Davis. I'm with Supreme Lending. I've been in the industry for a while. In fact, before you had to be licensed. So that just goes to show you how long ago that was.
Okay.
I live right here in Maryland, so I'm in the DV, grew up here. I live in Fort Washington. Of course, our company services all throughout Maryland. In fact, we're in every state. I usually tend to focus on Maryland though. And I like working with realtors as far as helping them serve their clients and get them to accomplish their dream of owning their own home.
Good. We welcome you. First thing I would like to ask that I think some buyers a question buyer might ask is, what kind of type of loans do you offer?
Well, so we are a major lender, so we're going to do pretty much every type of loan that you ever heard of. What we're most busy with is working with first-time home buyers. We do have all type of programs as far as down payment assistance. I myself am very familiar working with home buyers that have what we call credit issues. Okay. Maybe you don't have perfect credit. We do have ways to help you with your credit and get you approved. And I will say, if you are a home buyer and you do have credit issues, the best way for you to get approved and get your credit worked out is to talk to a loan officer, because he's going to know the minimum work that you need done in order to get approved. So that's usually a little bit better shot than going to some credit repair agency or something like that, usually in most cases.
Gotcha. So how do you determine what's the best loan for a client in most cases?
Right. So as with most loans, they usually have a purpose of the reason why you would take that loan. But just maybe just talking about the simple loans or the most basic loans, whether it be FHA, conventional, there's the VA, USDA loans. Anybody that's a veteran, of course, that's one of the first loans we're going to look at because of the no down payment. The VA looks after you if you're a veteran to make sure that your the fees are within certain ranges and stuff like that. So that usually does work out pretty well for veterans. Now, when it comes down to FHA and conventional, FHA is your government-backed loan. So that's going to allow you to get in with as little as 3.5% down. That's basically where the government saying, hey, we're going to stand behind this home buyer. Even though this home buyer is not putting down 20%, the loan is a little bit more riskier. But the government steps in and say, we're going to guarantee this loan for them. So usually FHA loan is good for that person that don't have a whole lot of cash and assets.
Now, what about the person that's credit challenged but has money? Is there anything for that buyer, or would you just be working to get that buyer's credit up?
Well, so it depends on how much cash you have. Okay. In most cases, what I like to do, I like to work with a home buyer and find out why their credit score is not high enough. Okay. So with doing that, I'm trying to get everybody up to around 640. If your credit score is not at a 640, and other than that, you got good income, you're working, you pay your bills, then there's a reason, there's something that's suppressing your score, keeping it below 640. Usually, if we could take care of that, you'll see your score shoot straight up. So I'm always like to take a look at that first. Now, there's some reason we got to get in this house. We don't have a month or two to wait. Then there are some ways to get in with a lot lower credit score. But of course, like you say, you're going to have more money. You're going to have more reserves set aside and different things like that. Maybe even pay a high interest rate. So.
Gotcha. Is your underwriting handled in-house?
Yes, we handle all of our underwriting in-house. It's our loan. So we're basically financing the loan. We're going to provide the money and everything like that. And then afterwards, we do have investors that might come in and buy the deal from us after that.
Gotcha. What's your average loan processing time?
Average loan processing time is right around 20-some days. We do like to give a 30-day waiting for us to closing. More than likely, without barring any issues, we're going to definitely be able to close within 30 days. Some things we can't, control are beyond our control. If it's something that's involving the appraisal or something that's completely a third party, but we like to get those things ordered quickly as soon as possible. As soon as we know that we got a deal. So a lot of times that depends on the home buyer going ahead and making that commitment and getting all their docs into me so we can go ahead and get that appraisal order.
Gotcha. So you mentioned the appraisal, so I'm gonna jump up on one of the questions I had about in regards to appraisal, since you're speaking of appraisals. What happens if appraisals come in too low? What is normally the outcome? How in your experience with any of those?
Right. So it doesn't happen as often, but it does happen. And so when that appraisal does come in lower, of course, I'm on the side usually of the buyer. So the buyer already agreed to pay maybe $375,000. And if the appraisal come back at $355,000, well, okay, now usually that buyer can use that as a negotiation opportunity. Say, hey, look, the appraise your house, they say your house is not worth that. In most cases, I've seen the buyer go ahead, say, hey, I'm ready to get this house sold. I got a buyer here ready to go. And I got an objective appraisal that says the market right now is going for $355. So usually we don't have a problem in that case. If like we just got through with the seller's market, that buyer or that home seller may say, you know what, I want to hold out for $375. In fact, I want to sell it for $385. In that case, if the borrower still wants to buy that house, then they usually would have to come up with the difference in far as the down payment, because we as the lender, we're only going to loan up to the appraisal amount.
Gotcha. So I'm a borrower. I'm looking at bankrate.com. I'm looking at maybe your website. I see interest rate. I see APR. Tell me about those. Okay.
So interest rate and APR, when we buying cars and different things like that, any other type of loan, we kind of use those terms interchangeably. Except for when you're buying a home, it's not the same thing. Your interest rate is what we mostly think about when we think of interest rate. When you look on your mortgage statement and you see your interest rate that you're paying, or your interest rate at a certain level and you want to refinance, they ask you, what is your interest rate? So that's what we normally think of when we think of interest rate. When it comes to APR, APR is a little different. APR includes additional costs within your loan that you're paying. Maybe you might even consider some of those closing costs or whatever, just being technical. So when we throw all of those other additional costs into the total amount of the loan, then we do that multiplication division, and that comes out to your APR, which is always going to be a little bit higher than what the interest rate is.
Gotcha. And so you got that buyer, they're looking at, they got a property under contract, and now they're speaking with you, and they say, what is this loan estimate? What is that all about?
So there's a series of documents that the home buyer will be getting as they're going through underwriting and going through the process. So I take it upon myself to make sure that that buyer understands every step of that, because there's countless number of pages. Most people are probably not going to read from page 1 all the way to 33 or however many they are. So I want to make sure they're comfortable and know what they're signing. A lot of that stuff just has to deal with disclosing to you the numbers. The initial disclosure that you get, you got to understand it's going to be full of estimates. If your mortgage insurance is this much, if your hazard homeowner insurance costs this much, then when we figure all that in there, here's what your monthly payment is going to be. Remember, that's just an estimate, but that's all part of the commitment process. So don't worry about so much the numbers on it. They're going to be close. They're going to be approximate, but the final numbers is going to be your closing documents before you go to closing. And you have to get those final numbers at least 3 days before closing. So you'll never be in a situation where you just rush, somebody slaps some pages in front of you and you got to sign and you don't know what you're signing, and now you're in the middle of something. So you're always going to have at least 3 days for your final numbers. And I'll be able to go over with those buyers, those final numbers and what they mean as far as your payment.
Gotcha. Now, you already spoke on this partially. You did mention that your loans could possibly be sold. Do you know around about the percentage of times that your loan is sold or could be sold? And what does that actually mean for the borrower?
Okay, so let me start with what it actually means. It absolutely means absolutely nothing. Whatever your payment is, that's what your payment is going to be for the whole time, especially if you're at a fixed rate. Okay, so you have a fixed mortgage payment. Yeah, I've seen people's home loan get sold 3, 4, 5 times within a 30-year period. I mean, that's a long time, 30 years. So it may be other people. All you have to do is think of it as there's another banker lender taking over the money or receiving the payments. None of your terms change. Absolutely none of your terms will change, though. It's just a matter of who's getting the payment. That's the only thing that changed. So that does happen quite often with most lenders. Okay? In fact, you'll see with these organizations like FHA and stuff, they have to do that. It's important for them to do that in order to turn and get more money in, to make sure that that money is available to other home buyers that's coming out there. Because if they just held on to those deals for 30 years, then the program would run out. There wouldn't be any money left for anybody else to use or benefit. So you will see that most of the time.
Gotcha. And do you know the percentage of times how much your company actually holds, keeps the loan, or do they pretty much sell the loan, all of their loans?
Yeah, I like to always tell my home buyer to expect that they will sell your loan. Gotcha. Yeah, it depends on the market, just like us when we hold investments. If you might hold something and, hey, it's the best time to sell it now, you're going to, that's the way they kind of look at it. So it's all based on the economy and what's going to work out best for them. But again, it doesn't affect you as the home buyer whatsoever.
Gotcha. Now, the same buyer is running around and she's pulling her hair because she keeps hearing all this talk before she talked to you about DTI. What is the DTI?
Right. So DTI is debt to income ratio. So as simple as I can explain it, a person that makes, I don't know, $25,000 a year,
Mhm.
is not going to be able to afford as much home as a person that makes $100,000 a year. That makes sense, right?
Mhm.
So DTI, your debt to income ratio, that's saying after you pay your debts, which is your debts are those that's listed on your credit report. So we're not talking about electricity, water bills, none of that stuff. Only those what do you call it? Obligations that's on your credit report, credit cards, car loans, student loans, those different things like that. If you have a lot of debt, let's say you making $2,000-3,000 a month. Well, if you got $1,000-1,500 a month in expenses, then of course you're going to have less income left over. So what we do is we find that out by percentages, how much percentage of your income is left over to be able to use towards purchasing a home. So that's where we get the debt to income ratio from. Most debt to income ratios, we want to see you right around 40, 43%, something like that. We can go higher in some cases, 50% and stuff like that. So that means 50% of your income is going towards your household payment, your mortgage, principal, and insurance. That's what that means in that case. The lower the DTI, the more better you are as far as financially speaking. If that makes sense.
Gotcha. So there's this that same buyer is running around and she keeps saying, why Marcellus keep asking me about a pre-approval or a pre-qualification, and he doesn't like one over the other. Tell me a little bit about that.
Right. So in the basic sense of pre-approval, you have two families, household income $80,000. Well, you think they both make the same income, they should both be able to afford the same home, right? Well, no, because we just talked about DTI, debt to income ratio. That one family is going to have different household expenses or different expenses on their credit card. One might have a car with a $500 payment. Another one might have a car with a $200 payment, or no payment at all. So both of those is going to affect how much house each of those is going to qualify for. So as a real estate agent, even myself, if a person just walk into the office, I don't know what they can afford until we work the numbers. Got to get in there, look at their credit. The credit score is going to determine a little bit about what the interest rate is. The higher the interest rate is, then of course, the higher the mortgage payment is going to be. So that means then if they're buying a $300,000 home, that payment is going to be X, right? Depending on the interest rate. If the interest rate a point or two higher, then the payment is going to be higher. So when we do a pre-approval, what we're doing is we're taking all of the guesswork out of that. So you as a home buyer, you already know if you buy a $300,000 house or a $400,000 house, you know how much that's going to affect your payment. Then that way you'll know what you are able to afford. And you as a real estate agent, you want to know that before you start showing a person a house that's cost $500,000 and they only could afford $250,000.
Yes, sir. Yes, sir. So that's most of the question. And you have anything that you want to share that we should know about what you guys have going on or what you have going on?
Yeah, so I would say everybody is a little concerned right now because, as we know, interest rates have gone up. So interest rates actually, even though they're high compared to our experience over the past few years when they were down at 3% and sometimes lower than 3%, interest rates really are not that high when you look historically. Mm-hmm. Some people pay 10, 12, 13, 18% interest back, in the years. And I'm not talking about back in the 60s, I'm talking about back in the 80s and 90s. Mm-hmm. Interest rates were high at one time. So even though the rates are not that high, they are higher than what they used to be or what we used to in recent years. So you would think that a lot of people might be out of the market now. No, houses still are there to sell. It's still a good time for you to buy a house. Don't wait until the world changes and interest rate go back to 2%. Who knows when that's going to happen? You shouldn't be making the house or the decision whether you buy a house solely based on what the interest rate is going to be. Because then once you're in that house, you can always refinance and get a lower interest rate then, just like people have been doing for the past 5 or 10 years, refinancing the house, getting the lower interest rate. So don't let it be the decision solely on the interest rate, but let it be solely based on, do you want to move into a home? Do you want to get out of an apartment? Do you want to stop renting and start owning your own home? And can you afford the payment? Can the realtor find you a house that you like? And if they're working with you, I'm sure you'll be able to find them something that fits their numbers the right way.
We work it out. But I got a quick question. We had So on our office meeting on Monday, the broker mentioned, hey, what do you do if a buyer gets cold feet? Now, I don't know if this is where we really should talk about it, because consumers are actually looking, but maybe they should know. So if I'm on this side and you're on that side, the buyer's already talked to me or haven't talked to me, maybe they called you first. Give me your opinion of what you would say to a buyer that has cold feet.
Okay. Well, actually, that's something very realistic that I feel like I deal with every time, especially the past 2 weeks. My last buyer I was working with just last week, as far as the rates going up and everything like that, she's basically looking at trying to get into a condo. And she was like, man, if I would have did this last year, maybe I would have got into a single family home, so she was looking at that. Of course, you have the condo fees and everything. So, I have very open and honest conversations with her. That's what I did. And I would do that with all my buyers. I say, hey, the first decision you have to decide is, do you want to be a home buyer now, or do you want to wait? If you want to be it now, then you're getting it at the interest rate what it is now. No one has a crystal ball and can predict and say what the interest rate is going to be in 6 months or a year. We all got guesses, but you can't put a whole lot of weight in that. You can't really take that to the gambling table, okay? So forget about the rate. Do you want to be a homeowner now? Here's what it's going to cost you. Can you afford that now? If you feel uncomfortable with it, how we say there's always by the books what the best decision is financially, but sometimes we can't go by the book. Sometimes that person has to go based on what they're comfortable when it comes to financial decision. This is something I learned from Susie Orman. She used to always say, if you're going to do this financial decision, but you're going to be uncomfortable with it and it's going to worry you, then you should not do that decision. So my whole job and supporting them is giving them all the facts and giving them all the options and saying, which one do you feel more comfortable with? And I think when most people have all the information, then it's a lot easier for them to make those decisions, to make the right decision.
Well, my the way I probably would approach it would probably be just straightforward and today, and it would just be, look at what the rent would be if you go back out there. So if you had to go and get rent the same type of property or rent a different property, what would that rent be? And let's say the rent is $200 right now, cheaper than what that mortgage payment would be. Now, do you understand that the rent could go up 10% next year? And to really just for me, that's the way I would just come after, because it's like right now with all the rents just being crazy, this almost doesn't make any sense when you compare the two, especially if somebody is actually buying in an area where they were once renting or where they probably would rent. It just doesn't make any sense to go back and pay that landlord's mortgage and help them build the wealth, to me. So that probably would be the first thing I would probably go after. And
that makes a lot of sense. That makes a lot of sense. I agree with you.
So one of the things, so what are you seeing right now? Your buyers are coming in, and you just mentioned those two things, but how are you seeing the market? What are you getting a feel for right now?
Well, so rates right now are stable. So, and really that's good news. Most people think, well, good news would be the rates are dropping. Right now, rates are stable. That's awesome just to have that. So, of course, when we had the seller's market and we had 5, 10, 20, probably not 20, but I'm sure I've seen some with 10 offers on one home.
There's been 40.
40?
40. A townhouse that wasn't even renovated, 40 offers.
Is that right?
Yeah. 60 people through the open house on a Saturday. Yeah.
Man, see, when I tell people that, they be thinking I'm exaggerating,
Oh, yeah, it was real.
Wow. So I don't know. I've been hearing from other realtors that that's slowing down just a little bit.
It's slowing down a lot. It's slowing down a lot. Yeah. You're probably. I got seller concession on a couple of deals. Yeah.
We're back to normal then.
Yeah, I got session on a couple of deals. I got FHA with no problem. It wasn't worried about conventional. It wasn't worried about mortgage, Maryland mortgage program. So things are starting.
Right.
It just depends on where you are and the house location and all of that stuff. So
That sounds exciting on one hand.
it's very exciting because when that market is crazy hot, it's more work, especially for the buyers and the buyer's agent, right? And so
Right.
you multiple offers and everybody frustrated.
Yeah.
It doesn't make any sense. It's like, what is going on? And then you have buyers on the other end. I just had a cash buyer who just quit on me. She's like, I just can't go through this.
Wow.
She's like, no, I don't want to pay this. When I sold my house, I couldn't get over, but she was in like another area where for whatever reason, her house just wasn't hot on the market. So she thought she was going to get way more money about 6 months ago. And then she ended up coming back into the market and has cash to buy. But she went into another market, right? So it wasn't, she was in the Manchester, Maryland area. Then she came back and went to the Baltimore County area, Owens Mills, Pikesville, up and over that way. And she just thought that, it was going to be the same, she felt what she had in Manchester was going to be, it's more people looking for houses down in that area.
Right.
Closer, the commute is probably better than traveling up the hill. So it was a whole nother ball game for her. Everything that she was actually able to really look at needed renovation. So it just got to be nuts. But that's what I'm saying. I'm seeing some things normalizing. It's always better for us really, to be honest, to be on the listing side. But when you have those buyers, the last 2 years was rough. Like I said, it was rough. You're writing offers and you were trying to rub elbows and everything. None of that stuff would work. Like your friends out there wasn't your friends anymore. It's like, what? Like, what happened? Like, we was good. I could bring a deal to you and we cool, but not when somebody else is coming in 15,000 over and changing the outcome of things. So we got to see a crazy time, and good for some people and bad for others. So
right.
Yeah, so
so I think the future looks bright then.
I believe the future looks very bright. I mean, if the market stay balanced for the next 3 to 5 years, and what I guess we would call a normal seller's market, which was what was going on in 2019, and then all of a sudden the pandemic came in and made it a crazy hot seller's market, right?
Okay. And
then the other thing as well, I think, and I was just telling this to another agent earlier, if you look at it, there's still a talk of baby boomers and all of that stuff who are starting to, the largest wealth transfer. We're in the years of the largest wealth transfer. And when those folks start getting into condos, I had a couple of calls about people trying to get in 55 plus communities and all that stuff and possibly selling their homes where they are. The problem with that inventory is it's not renovated inventory. It's going to be pretty much as is. So although that inventory looks like it's picking up, it's not the inventory that the buyers prefer.
Right.
So it's going to look like the inventory is picking up to stabilize the market, but I don't think that's going to be, because it's very hard to get those people to look at. Everybody wants instant gratification. They want to move in ready. They're not thinking about the opportunity of going like a 203K or something like that purchase and get the renovation money and go in and make it like you want to. And so that's going to leave that market open for investors, if you will. So if that's the way I kind of see things. Probably if I had a crystal ball, I say, next 3 to 5 years would be all this inventory, but the inventory that the buyers don't want, giving investors the shot to come in and make money hand over fist, either flipping or renting at that high rent rate. So and trying to get people to educate people. I've been trying to educate, because when I became licensed in 2011, that's all we had was foreclosure, short sale stuff, right? On the market. And it was a thing of us trying to get people to understand. And with trying to connect with the loan officer who actually did the 203 cases. I'm like, this is perfect. Now the time for a consumer home buyer to become like an investor, think like an investor, buy the property, and build equity for the future. Folks just wouldn't do it.
Really? That was one of the main strategies I was able to use for all of that competition on one house. I was trying to, hey, we'll buy this ugly house and then make it the way you want, less competition. Yeah.
I couldn't get folks to do it. I tried to even change, like I said, I teamed up with a lender. We just couldn't. And one of the things, one lender back then was telling me, said, man, I like your idea. The problem, one of the problems was the contractors though. So one of the lenders said, I really want to do this, but the problem was is we would connect people with the contractor so that we make sure that everything goes smoothly and get all the renovation budgets and all that stuff. The problem is the contractors screw up or something between the buyer and the contractor doesn't go right, and then your relationship with the buyer becomes a problem. But because you guys put it together. So that was one of the problems that we had that made me kind of fall off from actually continuing to try to preach and educate people to do that process, because I just couldn't find a lender, especially at that time, that was he was already got burnt, and then the folks were good clients, so it was a thing of not trying to with those clients. He didn't want to lose the relationships for the future, so he kind of backed out of doing that.
Yeah, so, I see. Well, and at Supreme Lending, we have a special team set aside that kind of like handles those with a white glove. So that was a concern in the past. So yeah, we're not trying to take any chances like that.
Gotcha. Mr. Davis, we surely appreciate you. Tell the people how they can reach you. Okay, so man, I have a long email, but larry.davis, you just move my name, put a dot in the middle, larry.davis at supremelending.com. Or my phone number is even simple. I'm in the Maryland 301 area code. So 301-832-4310. 832-4310. And so you only do Maryland. What states do you operate in? Are you licensed in?
So I'm only licensed in Maryland, but my company is in all 50 states. So every now and then I do get somebody that I transfer. The way they do it now, they want us to hold on since we have the report established. So hold on, monitor the deal all the way up until underwriting, and then someone that would take it over. Gotcha. So pretty much I handle the customer service still. Gotcha. Appreciate you getting on. The pleasure meeting you and all. Pleasure, my pleasure. Hey, my pleasure staying as much as I can. Look forward to talking to you again soon, myself. Yes, sir. Thanks so much for your time, and I'll talk to you and see you soon. Okay, definitely. Have a good night. Thank you. Bye-bye. Folks, appreciate you for your time. I hope you're enjoying the remainder of your summer. The kids are starting to go back to school. This is Hump Day Real Estate with Kendell, signing off. Have a blessed one.